that's quite a big idea. So we now move to the Q&A part of the session. So we've got about 33 minutes to go. Now, I normally start with the first question, but I can see the hands already up, so I'm just going to go straight into the audience and this gentleman here.
Yeah. Hello, my name's Peter Coval. I'm from Occupy London. I feel a bit like Daniel in the Lion's Den here, but I'll say a few things. I'd like to address myself in particular to Ruth Girardet, but there'll be some wider points. 30 years ago, we went to war with Argentina. We sent some ships 8,000 miles away, and today we're sending, or rather Tesco is flying apples in from Argentina 8,000 miles across the planet. Now, can somebody please explain to me what sense that makes in terms of climate change? Yeah? Because I don't understand why we have to fly apples halfway across the world today. Now, we're here today not just to talk about the environment. I mentioned that partly because Ruth has talked about climate change, but also because I know a lot of you are concerned with climate change. So these are the kind of things that companies need to be changing. But we're here talking about collaboration, collaborative capitalism. So what about this then, if I stay on the topic of fruit for Tesco's? Here's a quote. They called us all to a meeting, and they said that we would be laid off the next day. Then they retired us for almost, then they rehired us for almost half the wages. We used to have almost a month's holiday, but then this went down to 14 days. Right, this is from the Tescopoly website, which I can recommend to everybody. Go and look at the Tescopoly website, okay? So both on the environment and on social issues, I'd say that Tesco is not the leader that it's being set out to be. I don't want to pick on Tesco because I could pick on lots of other companies, but we've got the head of Tesco's corporate social responsibility here. So there are 5 apples here, ladies and gentlemen, and you can have one as well. I'll leave those with you to eat. Oh, by the way, they're organic, so that's okay, folks, yeah? Right.
Okay.
So I'd agree with more with the last speaker who spoke about cooperatives. I think
I'm going to stop you there. You've made 2 good points. We'll come back to you later.
Just finish the sentence?
Okay, finish the sentence.
All right. Just to finish then, collaborative capitalism, here's a question for you to discuss. Is that an oxymoron? You know, if companies, PLCs, are to become collaborative, are you not then moving away from capitalism towards something else? Okay, thanks a lot.
Okay, thank you. Now, I think there were some good points in there. Ruth, would you like to answer those points?
Sure. I'll start with the apples. They also buy 2 for 3. You didn't speak about buy 1, get 1 free offers. Okay, it's quite a complex and long explanation, so I'll try not to take up a huge amount of time. I think you're absolutely right that if we sell a product, we have a responsibility to ensure that that product is both safe and that it is also sustainable. Now, why do we sell apples in winter? Because people want to buy apples in winter. That's the starting point. When you then sell apples in winter, you have to look very carefully, again, as you've pointed out, at the sustainability implications of those apples. Now, the way in which we do that is that we actually carbon footprint our products, and we try and understand where in the supply chain the worst impact happens.
So the carbon labelling scheme, though, haven't you? You're not going to introduce carbon labelling.
Well, we're the only people to have introduced carbon labelling at the scale at which we have, and we're not stepping away from it. We're stepping away from the label as it stands. We're trying to make it more customer friendly. So, on those apples, actually, the biggest issue on apples isn't how they are flown or transported. The biggest issue on apples is how they're grown. And again, with Kenyan beans, you can do this particular calculation. I'm sure there are lots of experts in the room who can do it for you. But for each individual product across its life cycle, there will be carbon hotspots, and usually they're not the flying. Where they are the flying, less than 1% of our products are actually flown in. Where they are the flying, we're always looking at alternative ways of getting the product onto our shelves. So I think that's very briefly the point about the environmental impact of this product. In terms of the social points you were raising, I mean, it's very difficult to respond to allegations that come without context, or I don't know who said, well, what you've just read. I'm obviously familiar with the website you've been quoting. All I can say is that for every company it is absolutely vital that you have trusting and sensible relationships with your suppliers. It is actually what you were referencing as a negative externality. If you don't have long-term positive relationships with your suppliers, you haven't got a stable supply chain. So even if you just look at it from a very simple commercial agenda, it is not in our interest to treat people badly in our supply chain. So where we do know of that, we will come down and, you know, we can have a separate conversation about the case you're quoting, which I don't know what it is.
Great, thank you, Ruth. Nick, do you want to answer the question, is collaborative capitalism an oxymoron?
I think that's probably a better, I guess Cliff's already answered the question. I mean, it depends, I suppose, how you define collaborative. I think it is certainly possible to conceive of companies which have both a social purpose and also some degree of financial discipline, all right? In our world, we are being set up explicitly to fund social enterprises, social charities, co-ops. That doesn't necessarily make every co-op a social venture. Yeah, look, we wouldn't be being created, and we wouldn't believe in what we're doing unless we thought there was some way of bringing social purpose and social value together with financial discipline and rigor.
Okay. Unless anyone wants to answer specifically that question. Chris?
Just to comment, Jim, on the collaborative capitalism. I think it probably is an oxymoron or a contradiction in terms, depending on how we use the phrase. I mean, every business has got to have financial disciplines, but there has to be a priority for the business. The business has to decide what its core priority is. It can't have two things and keep switching between them. It's got to decide it's doing one thing or the other. And I think that we generally use the word capitalism to describe those businesses which are seeking to maximize shareholder value. And I think it's difficult for those to be cooperative in my language. And in the same way, the cooperatives resist the temptation to have traditional capital because it effectively demutualizes them. It forces them to become profit-maximizing vehicles.
And Jean, Screw Business as Usual is full of examples of businesses that are doing well from doing good. So would you argue it is achievable?
Yeah, I think capitalism itself, when it started, was really started to make people's lives better. And I think it's gone off track. I don't think there's anyone in this room that wouldn't agree that it needs to change right now. And I guess from our perspective, we feel we all need to work together to make that change happen, whether that be existing companies or whether that be the new types of companies that are emerging. And whether that be called collaborative capitalism, whether that be called business as a force for good, there needs to be a new way to do business. And that's one of the fundamental issues we have in the world today. And I think the way that we look at it is we need to work together with both, again, existing companies that Virgin certainly by any means is not perfect. We're on that journey right now, but we're committed to looking at how we can become a better company.
So we've got a question in the back.
Anna Simpson, Green Futures magazine. It's a question for the whole panel. Gender inequality is the elephant in the room of collaborative capitalism. What are you doing to support the crucial role of women in shaping a sustainable future?
Does anyone want to take the lead on that? Jean, I know you were talking about this recently, weren't you?
Yeah, we actually just, we're having a debate online about this exact question. And I think it's an interesting one. And I think that I personally feel that probably to date, the strengths that women bring to the party have not yet been fully valued. And I think working towards this new type of way of doing business is going to value those strengths much more fully. Things like collaboration, things like a focus on people, things like honest and transparent conversations. So I think that women now, their strengths are actually coming into bear more than ever before in the world, and I think that will continue to grow. I think hard things that we're trying to do right now are through our Branson centers in the Caribbean, in South Africa, what we're doing with Pioneers in the UK, are trying to help young female entrepreneurs in particular start their own businesses and grow, and also throughout our businesses trying to link females with other female mentors. So there's a whole host of practical things we're doing, but I think the time is now, and I think it's a fascinating time for female leadership.
Anyone else want to add to that? Cliff.
I commented in my 7-minute slot about how the mutuals were first to give women the vote a long time before they had the popular vote. And I think certainly within the cooperative sector, there's always been a strong theme of equality. The women's movement within cooperation is very strong. And it's at the heart, equality is at the heart of their core values.
Great. John, down here. And then Penny.
Hello, John Hatton from Alpheon Energy. I'm an ex-banker. I love Tesco and all they do. I think they make the world a better place. My company, though, we do the right thing in renewable energy, so I guess we kind of sit on both sides of the spectrum. One of the issues is that capitalism is meant to deliver returns for pensioners and pay tax for public services. And therefore it's necessary for the current structure of capitalism to work as it does, because shareholders typically own Tesco, insurance companies as well. How does collaborative capitalism pay for retirement, which is really what a lot of the pension funds are doing? What sort of returns are available for those types of purposes in collaborative capitalism?
So, Jean.
I mean, I think one of the things that we've seen is that by doing good, businesses can do really well. And there's hundreds of examples of those right now around the world. And I think by, for example, GE Go Imagination or Marks and Spencer's, and we've done several studies in our businesses where we have put pilot programs in place and found that we've actually increased the revenue of a customer as well as had them stay on board longer because we're being collaborative in a range of different ways, whether that be from a social perspective or from an environmental perspective. So I think if we all come at this at the angle that actually it's going to promote more shareholder value, and starting to argue that, and starting to build the case studies and the data that proves that that's truly the case. And I think, if anything, through the Occupy movement, through the revolutions, that's going to become a necessity for business survival as well.
Yeah, I guess I don't see the conflict necessarily between those two. I mean, I think if you're and I've been a pension fund trustee, and what you're trying to create when you're managing pension assets is you're trying to create a good retirement for whoever the beneficiaries of the plan you're managing. That isn't all about maximizing your risk-adjusted return. And I think it's a fallacy to say that and the way that we couch fiduciary responsibility when we talk when pension funds are investing money is definitely focused in that area. Maximize your risk-adjusted return, think about nothing else. From a purely legal sense, and Fair Pensions have done some good work on this with, I think, Freshfields. There isn't actually a binding legal requirement in UK pension plans to maximize the risk-adjusted return, and they could think more broadly if they wanted to. And I guess our position is they should think more broadly.
Yeah, I mean, I'm happy to add to that. The reason why I stood up at the beginning and said I don't think collaborative capitalism is anything new is because I do actually believe in that concept of shared value, that if you create shareholder value, that you can also create community value, not necessarily and not in all circumstances, but a lot of you work in green industries. I mean, one of the reasons why Tesco has been so dogged in its pursuit of its carbon targets is because it saves us money. But that doesn't in itself make that a negative outcome. So I think you have to find those points where the greater social good and the commercial good overlap in the system in which we operate, and then make those work. So I agree with that.
Hello, I'm Penny Shepherd. I'm the Chief Executive of the UK Sustainable Investment and Finance Association, and this is not rigged that this question so much follows the last one. What I'm very conscious of is that one thing that the cooperative group and Tesco have in common is that they both invest in profit maximising commercial businesses in order to deliver a financial income to employees in retirement. If we look forward, increasingly we are seeing employers providing workplace-based savings options to employees. what would you be looking for from such workplace-based savings opportunities in the future to enable your employees to benefit from collaborative capitalism?
Shall I kick off on that one?
Go on.
I think perhaps at a slight tangent, really. If you want to invest for your later years, it's very difficult to do so without investing in equities. If you want to invest in the mutual sector, it's practically impossible in the sense that we understand it. And one of the reasons why I think we have a culture which is something of a monoculture in terms of corporate structures isn't because there are lots of PLCs, well, it is because there are lots of PLCs, but it's because we all want to maximize the return on our cash, on our savings. And until we as savers, I think, decide that what we actually want to do is not maximize everything, we want to take a chunk of our savings for our later years and put them in something different, which if we don't put them there, we won't have local health services or local leisure services or local renewable energy. A form of funding, I don't use the word invest because I think that's a loaded term, a form of funding which, like the traditional co-op model, isn't going to give me capital growth. It'll give me my money back at the end, and it might give me a modest return. But we can't really do that at the moment, and we need that. The mutual sector needs that. I've not directly answered your question, but I'm kind of wanting to highlight that at the moment there aren't the opportunities for us to do with our money what I think we need to do with it. And we're slowly trying to find the way of creating these businesses which are not profit maximizing, but they are perfectly legitimate commercial enterprises. It's just that they exist for a different reason, serving a different purpose. And that different purpose is enshrined in the form of capital.
I think that's a very important question, and there's been research done on which has asked individuals in this country if they had the opportunity, would they be interested in investing in investment products that promised some sort of social or community benefit in addition to some financial return. And 65% of people surveyed by Ipsos Mori said yes, they would. And I think there are ways, I mean, the whole mandate that Big Society Capital has is to try to find ways to offer those alternatives to people. And I think as part of pension schemes, we should, hopefully, if we fast forward 5-10 years, we will all, as part of our options in our pension plan, have the opportunity, if we choose, to make those investments.
Anything to add? Let's go to the back.
Hi, my name's Kate. I'm from the People's Supermarket. We are a cooperative, we are a supermarket, and we don't sell Argentinian apples. But we did support Occupy. My question is a broad one, and it is around a term called social franchise, which is a way of enabling businesses that seek to do good, whether it be cooperatives or social enterprises in the truer sense. How are they able to do social franchising when actually to do a franchise you are selling a product that has to make a profit? I'm wondering if anybody on the panel has a view on social franchising.
Social franchising? Yeah.
So, I mean, social franchising, one of the, there's no reason why social franchising, as long as they're sustainable, there's every reason to think that they can be commercially funded. Okay, but they need to be through loans rather than through equities because they're equity investment because they're co-ops. But we have had a small amount of dormant accounts money available from last year. And one of the things we've done is supported a licensing fund that buys and makes available, in this case, to disadvantaged youth in the northwest of England, the opportunity to buy into franchises, because it's an expensive thing to do. They're not necessarily social franchising, but franchising itself is a very powerful way of rolling out and scaling models of social entrepreneurship. And I think there are creative ways of funding it.
I think you could argue that the cooperative movement is a form of social franchising, in the sense that there is a core idea and a word that's not probably as well protected legally as it should be, which you can use if you have those values and hopefully that structure. And as Nick says, it's a way of scaling up. But I think if you can create a brand, to use the capitalist phrase, you don't need to franchise it in the traditional commercial sense. It could, if you like, be a kite mark which denoted quality and denoted what the customer or the potential employee or the potential lender funder wanted to know about the business. And I think that is a way by which we can, as I understand the phrase social franchising, I think that's a way in which we could scale up. We could, for example, denote particular types of business with particular characteristics as being allowed to use a particular kite mark. And that would give confidence about of what those businesses were doing. It would need to be verified clearly. But I think that we have the ability to do that now. And I put it a bit gently that possibly the cooperative movement is a social franchise, but in a sense I think it is.
Peter, you're from the the Ownership Commission, who
in this chair now. Thank you. This document that's been emailed around, and there's a few copies knocking around on the tables, is Our Responsibility. And it was a couple of years' investigation into different types of ownership structures in the UK and across the world. And I guess, if you look at the types of people that were involved in the Ownership Commission, from all different types of businesses, PLCs, from across the private sector, also from different types of mutuals. So the one conclusion they could all agree with is that actually you need lots of different types of businesses to do different types of things. It's actually the form of the business which will drive the ultimate behaviour of the business. So whilst we can applaud all the different types of behaviours that we've heard about from private companies and PLCs trying to do the right thing, actually there needs to be more thought put towards the different choices that entrepreneurs can have. And I guess if I was going to ask a question, I was fascinated by something that Nick said in his presentation around whether there are sufficient choices, whether there are sufficient types of opportunities for people to invest and for people to take ownership of corporations. You mentioned B corporations in the States, which I don't know if people are familiar with here, but it's one of the ideas of having a different way of investing. And I'm interested in whether, firstly, we think there are enough choices at the moment and whether those are available to enough people. And secondly, whether we should be going further than that and having more.
Really, there's a couple of different alternatives of what we call blended value corporations, and they apply differently in the UK and in the US. In the US, we have B Corps, which are typically normal profit-making companies, but protect the directors and the management of the company against litigation based on you're not maximizing the profit of this company. So it allows them to pursue a social agenda in addition to a for-profit agenda. In the UK, we have community interest companies, which are regulated entities through the CIC regulator. They have to have a clearly defined social purpose. There are restrictions on the compensation of management. There's also an asset lock, meaning you can't sell the company, dissipate the assets, or pay dividends over and above a certain percentage. Now, CIC started in the UK about 6 years ago. We have 6,000 CICs. It's one of the fastest growing forms of company in this country. But still, most of them are small. Most of them have difficulty attracting funding. But I think it's a promising alternative to, on the one hand, in our world, charities, and on the other hand, for-profit companies. It's an alternative to some of the cooperative and mutual structures that exist. Is it enough? It would be interesting, I think, to have the opportunity to have something more like a B Corp structure here as well, which gave these, to be honest, more opportunity for private gain and had the opportunity potentially of attracting a different form of risk capital. But I think we're certainly better off in the UK and in the US than we are, say, in other parts of Europe and so on, where there's almost no legal form that embraces both these objectives.
Thanks. Didn't want to add to that? No, we've got about 8 minutes left, and I better just take a question from the coming in from the web to show that men can multitask. So I think this is a really specifically a question about big society capital for Nick. Is big society capital only about social enterprises? How do you define social enterprise? What about other small businesses that can show they are socially and environmentally responsible? And I guess it slightly follows on from your last point.
A quick answer. I mean, the Dormant Accounts Act forces us to invest in social investment intermediaries that in turn provide or facilitate capital investment in what are defined as third sector enterprises. So a third sector enterprise is defined by both its mission, and the mission needs to be embedded in somehow in the articles and objects of the company, and also its attitude to profit. So it's not necessarily an absolute given that it has to be a sort of a non-profit maximum company, but it's highly likely that they will be.
And do you have a definition of social enterprise, or is that not necessary?
No, I think social enterprise is defined by those two principles. Okay. One, what's your social mission? How is it embedded in the articles and legal documents of your company? Two, what is your attitude to profit? If you have a surplus, what do you do with it? Do you use it to support your mission?
Okay. Question. Well, the microphone's over next to Kieran.
Hi, I'm Kieran from INSEAD Social Innovation Centre and also Sony. I just wondered how we could get this far into the discussion without mentioning consumers and consumer sovereignty and ethics, which seem to be at the heart of sustainability and the problems we're facing. If you don't provide what consumers want, you're not in business. Shareholders don't care. And the idea that we can just provide consumers whatever they want, when they want, including their wishes to be environmentally friendly and good to the planet, and not turn around and say that's enough. It's not possible. In order to have a fair share of wealth and resources, you can't have everything you want. I think the failure of governments and companies and regulations to deal with that problem means that any discussion we're having, any form of organisation we want to set up, is not going to address the problem, because which direction are we moving in? Why are we changing these structures? It is to face the issue of ethics and equity, and unless you're dealing with the problem of consumer sovereignty, you're not going to get anywhere. So I just wanted to know why we hadn't discussed about consumer sovereignty in the whole of this discussion.
Maybe Jean, as a business that is very consumer-facing.
Yeah, I mean, I think that's my answer is a combination of things. I think we have addressed it from the perspective of we feel strongly that customers are demanding this new way of doing business that takes people and planet into consideration. I think that movement is growing stronger and stronger, and I think that will hand in hand force companies to look at the issues of consumerism and how quickly consumerism has grown around the world. So I think the pressure coming upward from the consumers themselves as they start to shift and be more aware of some of the issues that we're facing as a planet, and hopefully companies hearing that and changing how they're shaped, and these new companies coming into play. Some of them that are making people aware of these issues, like Participant Films, for example, and how the media shifts. And I think the media has a huge role to play in this, and what they're promoting and what they're communicating out. But I think all of us coming together, whether that be the pressure put upward from people around the world and the community, or whether that be companies looking at what they produce and how they produce it in a brand new way.
And Ruth, particularly from the point of view of carbon labelling, you've been very much championing the consumer in this game.
Yeah, if I can make a wider point on this, and I'm very sorry to pour cold water on the argument, but in our experience, consumers don't want ethics. So if in a recession, what you see is that all of your labels around fair trade, around organic, sell much less because people are focused on spending as little money as possible. And that's just the truth, and that's the reality, and that might be really difficult to take when you sit in central London and, you know, you've probably come here by taxi, but it's not what it feels like when you live in some other parts of the country. So I went to a school in Tottenham 2 weeks ago to talk about carbon labeling. And my first question was, I had two posters up. One said, I want fresh vegetables whenever I can have them. And the other one said, I care about how my vegetables have been produced. Of a class of 30, 2 went to the sign that said, I care how my vegetables have been produced. These people are 17. I mean, if you don't care with 17, when are you going to care? So I was very surprised by this, but I do think you need to have a little bit of a reality check on how much people care. And the reason why I say it is not because I wouldn't want them to care. One of the ways in which we do it at Tesco is we have all these products, so you can choose. You can choose whether you want to buy organic. You can choose which level of welfare you want your chicken to have had. And the truth is that vast majority of people chooses the least expensive option. So I think the challenge then for people like me, or for the professionals, is to work out how can we influence choice, and how can we actually make some of the more sustainable choices more attractive. So that's one point. My second point was, I think you're absolutely right to point out that the consumer is at the heart of this debate, but we mustn't conflate regulation with governance. So there are some things that are truly and rightly changed by the state, and then there are some things that companies can do. So what we can do is provide choice. We can provide choice at good price points, but there are other things that we can't do. So a good example for that would be the recent introduction or discussion around minimum pricing on alcohol. Now, you know, there's no point in an individual retailer changing how they sell alcohol if in the wider world you can still go and, you know, buy your 4-pack incredibly cheaply down the road. So there are some areas where you do need the state to regulate, and there are other areas where we can do everything we can to incentivize choice.
In the interest of time, we've got basically 1 minute left. So we've got one more question. Paul, no pressure.
Good evening, everyone. Paul Toyne from WSP Group. I think I agree with Ruth with regards to collaborative capitalism and not being anything particularly new. I think what we've seen from Virgin tonight, and indeed Tesco's, is community investment programs. And so my question is based around that, because I find it very difficult to be able to judge your level of leadership and commitment to community investment without really understanding, I guess, the proportion of your business's budget that's actually spent in doing this kind of work. So my question is to both of you, could you tell us roughly as a proportion what amount is spent, and is that typical of businesses of the scale and size that you are?
Yeah, I'm not sure. There's so many different ways of accounting for what people do, and I actually think at the heart of your question is a really important one, is how can we achieve better transparency and better comparability between what different companies are doing. So on your very specific question of charitable giving, we have a target of, across the Tesco Group, of giving at least 1% of our pre-tax profits to charitable causes. We've done more than 1.9% in the last 2 years. We account for that in our official corporate responsibility reporting. So that amounts to something like £68 million across Tesco, which we've given directly to charitable causes. What that doesn't account for is the work we do around energy efficiency, or indeed the social good that we create by creating jobs, or, you know, providing growth in a very difficult time. So that's why I'm saying it's difficult to account for these things, but you can get some hard figures.
And just to flip that on its head slightly, I think one of the things we're trying to do is get our businesses not to think of it as charitable giving, but think of it as their core budget, and so that they get every single employee thinking every single day what they should be doing for people and planet. That's our ultimate objective, so that it becomes part of your core central budget rather than something that's an add-on. And in thinking about it as a positive thing for the business. And that's not just for the social side of it, but also for the environmental side of it. And some of the things we're trying to do, I mean, we realize that airlines have a negative environmental impact. So one of the things we're trying to do is invest as much as we possibly can in renewable fuels, and also for airlines, and also look at how we can bring the industry together around that, because it's not just an isolated one airline that has to look at that. It's not even just one country that has to look at that. That's on a global scale. How do we come together to really move towards more sustainable industries?
And the answer is, in terms of your proportion of that effort?
The answer, I mean, for us, over 200 businesses, we wouldn't separate it out as a separate effort because it's part of a core budget. So it's not a separate charitable budget that sits to one side.
I think we've run out of time, folks, but I think that was an interesting last question to end on, because it's the idea of transparency, which actually is what our next event is on, just by chance, which is Transparency Judgment Day for Sustainability, and we'll be looking at social media and some of the things we discussed today. But I think, it's virtually impossible to wrap up today, but I think I liked Jean's last point, is that if we evolve from this sort of binary world of making profit and charity on the other hand, and actually start to doing well by doing good, then you wouldn't actually measure how much you're investing in communities, because it would all be aligned. Now, when we get there, we'll have to see. But thank you very much to our panel, who've been great. Thank you to you for your great questions. And you'll get an email from FIFO in about half an hour. If you don't mind just rating Green Monday, it helps us to always improve our events. So if you see it as our sort of innovation process, then yeah, we now go to roundtables, and thank you all very much.